Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, June the 24th. The year's 2025. Let's talk trading. How to see what you are missing. These videos are for educational purposes only. Your results may differ from mine. As always, let's make sure you have your risk management in place. That way, if you miss something, you're not going to lose more than you're willing to lose on any one single trade or during any one single session. So, how to see what you're missing. I know that sounds kind of funny, but if you've been following me for decades, you know I say trade what you see, because it's really difficult to trade what you don't see because you don't see it. So, how can you trade it, right? Anyway, what am I really talking about? Well, if you're like me, there's probably been a time where you got in a trade and it was a losing trade, and then you look at the chart and you go, oh man, I missed it. If I would have only seen that. So, right then and there, you have an opportunity. And the opportunity is to make yourself a note what you should have seen because you didn't have it on a checklist. You know, airline pilots have a pre flight checklist. Maybe you need a pre trade checklist. So you go through things in a systematic or methodical or planned out way. So before you click enter, you make sure you've checked everything. And of course, it sounds simple, but most of what I tell you guys is simple. I mean, trading is simple. This life is simple. It's just that we have a tendency to complicate things. We have a tendency to overlook things. We have a tendency to forget things. We're human. These are all human tendencies. So we have to compensate so we can overcome them. So what you might want to do is get yourself a post-it pad or a stack of 3x5 cards or just a 99-cent journal or whatever. Something where you can keep these notes, organize them. Or if you want, like this chart right here, I used the TRO My Notes indicator, and I wrote this so you can put notes on the chart. And on some of my charts, there are notes, and I've even seen other people out there using it. And in fact, some people think it's the best indicator I ever wrote. I have to say, it's a handy tool. But the thing is, we really want to see what we're missing. So if you have some rules, you write them down. That way you don't miss them. So, for example, one of the things that I sometimes forget to do um, is to start with the monthly chart and then basically look left. And right here, we can see we're in wick zones. We popped out of the previous day's wick zone, but we're in wick zones and we're at the 26 level, which is right next to 25, which is a psychological. So, so we look there. Then we can drop down to the week and look at this. We are right above all these wicks. So that might be trying to tell us something that price wants to go up. I mean, we've got a lot of FOMC type announcements and Fed chairs, and I think the Bank of England person spoke today, and it's obviously driving price up. Yesterday we were in the 35s or 34s. Yeah, yesterday we were actually at one time we were below 34. So we've shot up 256 pips off of yesterday's low. I sure hope at least one of you traders got some of that. So we look at the daily. You can see here once again we're in that wiki area now. It's already made a higher high, but it dropped below here. So to me, I'm going to start to think short. But what might I be missing? So we have to keep looking. So for the year, we can see once again looking back at these months, this is looks like it just wants to go down. One thing it might want to hit, let's just call it 142. I mean, that's almost 600 pips away, but this is trading and just about anything is possible. And I've seen the market continue up like crazy before. We had an inside bar 6 days ago. We broke out of that. We're just a couple pips ahead. So that's something to keep in mind. So we want to take a look at, these type of bars. There's an inside bar right here. You can see what happened. It broke that to the downside right there. For the day, 138 pips. And as I'm looking, I'm still looking, and now we're at that psychological. So the question is, it's either going to go to 136.00 or 136.50. Right now, I just want to put a short on. It's just how I'm feeling. So we look at the H1, we'd be going with the H1 candle color. We've only got about, 11, 12 minutes left in this H1 candle, so we might want to see what it's doing. You can see here from H4 on down, we're negative. We're coming out of the red rat zone. See here, we made a high, failed to make a higher high, got in the rat 2 smart rat zone there, exiting the red rat zone 28. So it could be 4 pips or better right now. And this looks like a return bar. So it looks like we want to come back down to 3600 area. H4 near R1. Okay, we hit R2, so if the bias is short at R1, it's definitely going to be short at R2. Bambino said to go long, near the pivot, go long. And looks like we missed that pivot again today. Yep, we missed that pivot. We opened way above it by 30, missed it by 34 pips. So looks like that pivot needs to be taken out. Take a look at the weekly. We took that out. Took out the monthly. Let me look at the H4. We got an H4 pivot here, 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 and here. These pivots need to be taken out. They might not get taken out, but to me it looks like, because this is a huge return bar. So, once again, I'm looking for things that's going to give me clues which way to trade. And so you also want to say, well, you're looking for shorts. What tells me I should go long? Because it's easy to find reasons to confirm what you believe, and that's part of your bias. And so you have to also look for things that say, hey, let me see if can I find at least one reason to go long, even though I'm looking at all these reasons to go short. Why should I go long? Well, that's kind of easy because a day, week, and month are green. Hey, guess what? We are in the upper ATR zone, which is another reason to start looking for shorts. We had a whole low open right here, highest open back at 35. So you'd be up about 10, 11 pips if you took that short. And let's see, we just crossed below that previous M30 low. That's a reason to go short. So a lot of reasons are stacking up to go short. We do have a couple, let's see, bar 1. I don't remember what that indicator is. Inside bar indicator. Yeah, okay, so we had an inside bar here, inside bar, a couple of outside bars. Let's take a quick look at that. Yeah, inside bar, M30 outside bar, so there's a reason to take a short on an outside bar. Low, H4 is an outside bar, out of that wick zone, crossing the H4 open at 25, another reason to go short right now. So I'm looking for reasons to counter that, and I'm having a hard time finding them. So once again, if you're wanting to go short. Oh, here's a reason not to. There's a 3-ball. Don't like trading against 3 balls. Okay, what do we have here? That just looks like is that an M30 candle? I think that's an M30 candle. So we're coming back to the 25. Okay, reason to go long. Made a lower low wick zone. We're popping through highs here from 2 bars ago, the open and the close. Back to the psychological. Put in a 1 ball. No, that's not. Is that a 1 ball? I have to remember how I have that dynamic indicator set. Is that set for 5 or 13? Set for 5, so that's a 1 ball. If I had it set for 13, that'd be a 2 ball. Okay, so once again, we've got the H4 highest open here, right there at 25. You can see we're barely a pip, almost a pip below it. It's moving up. Okay, we've got price near our previous week's high. We're above it by a couple of pips. The H4 close, we're right at it. H4 pivot point, we're 3.5 above it. H4 low, 1.9 above it. That's the current. H4 open, pip below. H4 from bar ago. H1, sorry, low. We're just barely above it in the current one. So once again, it just seems like overwhelming. Everything's pointing. We're short. We're below the H1 highest open, the M30 highest open. And once again, price is pushing down. Probably wants to cover. That's an M4. Is that an M30? That looks like an M4. The M candles, or candles M. Yeah, 4 hours. So it might want to try and cover that one. So, the biggest thing about seeing what you're missing is as you trade, you keep note of what you've missed. So now you have a checklist. So now you know what to look for. And you go down that checklist. Now, you can also, read about other people's methods or my methods and systems. And you go, oh, I never thought about that. So then you can add that to the list. So it's not just mistakes that you made, but also you can use it to incorporate new ideas, new methods, new techniques. And it does sound simple because it is. I know I'm repeating myself, but some things bear repeating because, traders, they just love the complex. They just love to see a bunch of lower charts with all these different squigglies and colors and shapes and, bunch of different numbers. But you can really make it simple. So, fellow traders, as always, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out. And just so you know, by the way, I had started this video last week, but for some reason the computer froze up, and so I had to start over. I said I have to go back and make this video. So this is the Rumpled One, over and out.